Hi everyone, this slide is introduced about MFRS 8 operating segment. MFRS 8 is an accounting standard that requires the company to disclose information about different business segments, including their performance and the financial position. The objective of this standard is to help the investor and the external user understand which part of the company perform better and to improve transparency in the financial reporting. An operating segment is considered part of a company if it carry out the business activity as a result regularly reviewed by the CODM and has a separate financial information available. Next is a type of segment. This slide explains two common types of segment under MFRS 8. The first is the business segment, where the RB HICOM report financial performance based on the different business activity, such as automotive, service, property, and asset management. The second is the geographical segment, where the company report the performance according to the region or country, such as Malaysia, Indonesia, and Thailand. This segment report help users better understand the company operation and performance. This slide continue with other type of segment. First is the product segment, where the RB HICOM report performance based on the different product and service, such as automotive, manufacturing, and engineering service. Second is the customer segment, which group of customer into category like retail customer, corporate customer, and government agency. Lastly is the subsidiary segment, where the company report performance based on the subsidiary such as ION and HICOM Tech. This segment classification provide more detailed information to the stakeholder. This explains the threshold for a segment to become a reportable segment under MFRS 8. There are three important tests. First is the revenue test, where the segment revenue must be at least 10% of the total revenue of all operating segments. Second is profit or loss test, where the segment profit or loss must reach at least 10% of the combined profit or loss. Third is the asset test, where the segment asset must be at least 10% of the total asset of all operating segments. This threshold ensures that only significant segments are disclosed in the financial statement.
Now I will explain the role of the Chief Operating Decision Maker, or also known as CODM. Under MFRS 8 operating segments, a Chief Operating Decision Maker is an individual or group that is responsible for making important operating decisions within a company. The CODM plays a major role in allocating resources among different business segments and evaluating the performance of each segment. Besides that, the CODM also reviews internal financial reports to identify which business segments are performing well and which segments may need improvements. Based on this information, they can decide on future investments, operational strategies, and business improvements. In simpler terms, the CODM acts as the link between internal management decisions and external segment reporting required under MFRS 8. Now for the example from the RB HICOM Berhad. One example of the CODM is Datuk Syed Faisal Alba Syed Alba, who is the Group Managing Director and Chief Executive Officer of the company. One of his main responsibilities is setting the strategic direction of the company. This includes developing long-term business plans, identifying growth opportunities, entering new markets, and making strategic investments for the company. In addition, he also oversees the day-to-day operations of the RB HICOM. He works closely with other senior executives to ensure the company's operation runs smoothly and efficiently across different business segments. Furthermore, Datuk Syed Faisal also plays an important role in ensuring the financial stability of the company. He is responsible for making sure the company remains financially strong and profitable through proper financial strategies and investment decisions. At the same time, he manages relationships with stakeholders such as investors, customers, suppliers, and regulatory authorities. As the public face of the RB HICOM, he represents the company in meetings and public relations activities. Because he is heavily involved in evaluating performance, making strategic decisions, and allocating resources across segments, he can be identified as one of the CODMs in the RB HICOM. Another example of CODM in the RB HICOM is the Group Management Community, which includes the Group Chief Financial Officer, Puan Aminah Osman, and the Group Chief Operating Officer, Datuk Jizili Muhammad Ramli. The Group Chief Operating Officer is responsible for overseeing daily business operations and ensuring that each business segment achieves its operational targets efficiently. He also monitors the performance of different segments to improve operational effectiveness. Meanwhile, the Group Chief Financial Officer manages the company's financial activities such as budgeting, forecasting, and financial planning. She also prepares and analyzes internal financial reports used by the management to evaluate segment performance. Therefore, the Group Management Committee can also be considered as part of the CODM. because they collectively participate in operational decision making and performance evaluation within the company.
Thank you, Alip. So I will explain the two types of segmental reports used in financial reporting based on MFRS 8, using the RB HICOM Berhad as our company. Under MFRS 8 operating segment, companies are required to disclose segment information, so user of financial statements can better understand the company performance, business activities, and risk. The two main type of segmental report are business segment reporting and geographical segment reporting. First is business segment reporting. Business segment reporting divide the company according to its different business activities, products, or services. This helps the investor and stakeholders in identify which business division contribute the most revenue or profits to the company. For the RB HICOM Berhad, the company operates in several major business segments, including automotive, service, property, asset and construction, aerospace and defense, and postal services. In the financial report, management assess its operating segment in accordance with MFRS 8. The company identify the chief of operating decision maker, or we call it CODM, and review the availability of separate financial information for each major business activity. The report also stated that the automotive and aerospace and defense business were combined into a new segment called mobility because they share similar economic characteristics, integrated value chains, regulated environments, and strategic alignment. These examples show how business reporting provides clearer information about how the company manage and evaluate its operation. Second, type of geographical segment reporting. Geographical segment reporting classify financial information according to different country or regions where the company operates. This allow user to evaluate which geographical areas contribute more revenue and where the company faces different economic risks and opportunity. For the RB HICOM, the geographical segment report show that Malaysia contribute the major portion of revenue, while overseas operation contribute a smaller amount. This information is important because it help investor understand the company dependence on certain markets and evaluate its international business exposure. So this is our financial statement for a group segment reporting for 2024 compared to 2025. Under this rule, an operating segment will be considered a reportable segment if it meets at least one of the 10% threshold. For DRB HICOM Berhad, major segments such as the automotive or mobility segment meet this criteria because they contribute a significant portion of the group's revenue and assets. So in this calculation, we can see our product and services, which is mobility, postal, banking, services, and properties. So external revenue have to plus with the inter segment, and we get the total revenue for our product and services. And then to get a 10% test for revenue is a segment which is mobility must divide by total revenue for all of the product and the services, and we get the reportable for mobility and continues to the all of the product and services. Includes the 75% threshold rule. This rule stated that the total external revenue from all reportable segment must account for at least 75% of the company's total consolidated revenue. If the total reportable segment do not reach 75%, the company must identify and disclose additional segment until the threshold is achieved. The purpose of this rule is to ensure that most of company activities are properly disclosed to user of financial statement. In this result, we can see that we get a 96.72%, which is it is more than 75%, which is it is more than 75%. Therefore, the existence of reportable segments such as mobility, postal, and banking will be considered reportable segment, and they do not need to identify the additional segment in order to achieve a 75% rule of threshold.
Today, I will discuss the benefit of segmental reporting using the IMRAN Berhad as an example. Segmental reporting is required under MFRS 8 operating segment. It provides financial information according to different business divisions within a company. The RBICOM operate in several industries such as automotive, property, service, banking, and aerospace. Through segmental reporting, user of financial statement can better understand how each segment performs individually. As shown in the table, the automotive segment contributes the highest revenue, while other segments provide diversification and different growth opportunities. The first key benefit of segmental reporting is improved performance, assessment, and risk analysis. Without segmental reporting, users only see the total company profit. This may hide weak performing segment behind profitable one. In the RBICOM, the automotive segment contribute heavily to revenue and profit, while other segments such as postal, property have different performance level and risks. This information help investor, bank, and management evaluate which business units are strong and which need improvement. Therefore, segmental reporting improves transparency and decision making. The second benefit of segmental reporting is better evaluation of future cash flow and growth potential. By analyzing each segment separately, user can estimate which division may contribute more profit in the future. For example, the RBICOM automotive segment currently generates strong revenue, while the property and service segment may provide stable long-term income. In conclusion, segmental reporting helps user evaluate performance, assess risk, and make better economic decisions. That's all from me. I will explain MFRS 134 interim reporting using EcoWorld as a selected company. MFRS 134 is a Malaysian accounting standard that governs the preparation and presentation of interim financial reports. Interim financial reports refer to financial statements prepared for periods shorter than a full financial year, such as quarterly reports or half-yearly reports. The purpose of MFRS 134 is to ensure companies provide timely and reliable financial information to users, such as investors, creditors, and regulators. This allows users to evaluate the company's financial performance and financial position throughout the year instead of waiting until the annual report is released. Now I will explain the core principles under MFRS 134. The first principle is the discrete approach. Under this approach, each interim period is treated as a separate accounting period. Revenues and expenses are recognized based only on transactions that occur during that specific period. For example, if EcoWorld records property sales during a quarter, those sales will be recognized in that same interim period. The second principle is the integral approach. Under the integral approach, the interim period is viewed as part of the entire financial year. Certain costs that do not occur evenly throughout the year are estimated and allocated across interim periods. Examples include annual bonus, property tax, major maintenance costs, and advertising expenses that benefit the whole year. This approach helps companies like EcoWorld present more stable and meaningful financial results throughout the year, especially when business activities are seasonal or uneven. Next, I will explain the items included in an interim report under MFRS 24. The first item is the condensed statement of financial position, also known as the balance sheet. This statement shows the company's financial position at the end of the interim period, including assets, liabilities, and equity in a simplified format. Using our example from EcoWorld Development Group Berhad, as at 31st January 2026, the company recorded total assets of RM 13.8 billion compared to RM 13.47 billion in October 2025. This increase shows that the company's asset base has grown during the interim period. On the equity and liability sides, total equity increased to RM 6.33 billion while total liabilities increased to RM 7.49 billion. This statement helps users understand the company's overall financial strength and whether it has enough resources to support its operations. The second item is the condensed statement of profit or loss and other comprehensive income. This statement shows the company's financial performance during the interim period. It includes revenue, expenses, profit, and other comprehensive income. This helps users evaluate EcoWorld's financial performance during the reporting period. Based on our example from EcoWorld Development Group Berhad, for the 3 months ended 31st January 2026, the company reported revenue of RM 1.35 billion, which increased significantly from RM 539.6 million in the previous year. Its profit after tax also increased to RM 165.6 million compared to RM 80.3 million last year. This shows that the company performed much better during the current interim period. In addition, the total comprehensive income was RM 138.6 million, which includes not only profit but also other gains or losses such as foreign exchange differences and fair value adjustments. The third item is the condensed statement of changes in equity. This statement shows movement in shareholders' equity during the interim period. It includes changes caused by profits, dividends, and other adjustments. This helps explain how the company's equity position has changed over time. Based on the example from Eco-World Development Group Berhad, we can see several components of equity such as share capital, retained earnings, reserve, and total equity. For the financial period ended 31st January, the company recorded a profit for the financial period amounting to RM 165.551 million, which increased the retained earnings and total equity of the company. However, the company also paid dividends amounting to RM 64.247 million, which reduced retained earnings. Besides that, there was also a conversion of warrants into ordinary shares amounting to RM 16.976 million. This increased the share capital of the company. As a result of this movement, the total equity increased from RM 6.239 billion at the beginning of the period to RM 6.331 billion at the end of the interim period. The fourth item is the condensed statement of cash flows. This statement shows cash inflows and cash outflows during the interim period. It is divided into operating, investing, and financing activities. This helps users assess the company's liquidity and cash management. Based on the example from Eco-World Development Group Berhad, the company generated net cash from operating activities of RM 915.460 million for the 3 months ended Q1 of 2026. This positive cash flow mainly from the company's business operations, which indicates that the company was able to generate strong cash from its core activities. Next, under investing activities, the company recorded net cash used in investing activities of RM 524.602 million. This happened because the company spent cash on property, development, purchasing land, and acquiring plant and equipment. This shows that the company is investing for future growth and expansion.
This slide discusses two significant events that affected the company performance. The first event is the new property launch. In 2025, sales reached RM 3.84 billion and the Iskandar Malaysian project contributed RM 1.99 billion, which is 52% of the group total sales. As a result, the company experienced higher property sales revenue and improved financial performance. The second event is the increase in construction costs. The price of cement, steel, and labor increased, and the Eco-World stated that rising of costs may reduce profit margin. This caused development costs to rise and may lower the company profitability. Overall, this event shows both positive growth, opportunity, and challenge faced by the company.
For the current period, the statement of financial position is presented as at 31 January 2026, while the comparative period is as at 31 October 2025. The statement of comprehensive income is reported for both the quarter ended and the 6 month ended 31 January 2026, together with the corresponding comparative period in 2025. The company also disclosed of the statement of changes in equity and the statement of cash flows for the 6-month period ended 31 January 2026 with comparative figures for the previous year, which complies with the comparative reporting requirements under MFRS 134. Overall, the presentation demonstrates how interim financial reporting provided timely financial information to user while maintaining consistency and comparability between accounting periods.